Investing in the future, AI, blockchain, and tech for good with Sangha Capital. In this episode, Dr. Jemma Green is joined by Carolina and Berta, who discuss founding venture capital funds, Sangha Capital, transitioning careers, and their drive to invest in tech for good. They share their journey from Bitcoin investments in 2016 to creating a community-driven venture capital fund, guided by mentorship and unwavering persistence in the evolving world of finance and technology. I'm your co-host, Anthony Pearl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
Welcome to the program, Carolina and Berta. How are you?
Good, thanks. Thanks for having us.
Thanks for coming. So for those that don't know, Berta and Carolina are sisters, and they set up a fund called Sangha Capital. How long ago, ladies?
Like 4 years ago?
Yeah. And Berta, maybe you could just tell us a bit about your background, which is in psychology, and how you decided to effectively make a career change and become an investor.
So I was a teacher and a psychologist before we started Sangha. And I think with my sister, we always wanted to do something together. That was our main goal, like try to match our careers to do something together. My sister comes for the finance. She's going to explain you later. But I think what brought us together was a little bit when we invested in Bitcoin early 2016. And then we started learning about blockchain and the potential that had into changing and disrupting so many industries. And that got our attention from day one. So that brought us together. And then we wanted to try and find a way to work together. We met Bill, our co-founder now and mentor. He was key on this process. The first time we met him in Davos and we saw you pitching as well, it was, I think, life-changing for both of us. It was the first time that we could see literally a new world of things that we needed to learn, explore, and wanted to be part of it. And we've been lucky to be able to start Sangha and transition my career into that. And I'm super grateful for that. And I'm trying to bring my expertise on psychology and education into the field.
Amazing. And you mentioned Carolina will tell us a bit about her story, and it was in finance. Carolina, could you tell us a bit about your background and how you came to set up Sangha and also came to set it up with your sister?
Yes, of course. Yeah, first of all, thank you very much for having us. And then, so I come from a bit of more boring. It was literally, I just did a bachelor in business administration and finance, went to work for a single family office and then city private bank. And then after the biggest multifamily office in Europe, and I did that for 11 years all in total. And after 11 years in the system, I kind of realized, first of all, the power of money for good or bad, it can go both ways. So it was a bit frustrating from doing every day something where you don't add value much to, you're just part of a wheel that keeps on spinning, but it has so much importance. Depending on where the money goes, the future gets determined, right? So capital flows actually do impact a lot. So as my sister said, when we were not tech people, I was not a tech person, but then when we invested in Bitcoin, we liked the social angle of the technology for a first time ever. We never questioned it too much as well. We were younger. But then we're like, wow, you could do both. You could have land registration. You could have energy being decentralized. There's so many things that blockchain had a social angle to it. Not so much the tech, because we were not the people, but definitely we saw the impact of a technology. And then we started reading, starting to go to conferences. We were very lucky to meet Bill Tai, and he was a venture capitalist. And then, doing a research a little bit of what our clients as well were looking at the family office. There was a lot of philanthropy or venture in tech. And then the other asset classes were a bit less interesting. And venture had very good years as well, the past 10 years. So it was kind of wow, there's a gap here where it's tech for good. Nobody's really looking at it much. It's much more either tech or philanthropy, but impact can make returns. And if we can get the topic going and just kind of create tech for good venture, learn from Bill. I think by now we've learned a lot. Now we run it. So it's been amazing. We're very lucky to have as well him as a mentor. And then we had a lot of people that supported us on the journey. So we're on Fund 3 already now. It's been 4 years. And we're just very lucky to be doing this. And I think we managed to find what we wanted. We just work together on something we like with amazing people, learning at the same time as trying to add as much value as we can. So it's kind of like win 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 everything so far.
Gotcha. So it sounds like it was a combination of feeling somewhat dissatisfied or like not totally fulfilled in the work you were doing before, and then also seeing a gap in the market, which was investing in this for good space. That wasn't really distinguished. So you saw a kind of new kind of asset class, I guess, and you wanted to do something for good. And you also wanted to work with your sister as well. That was something
Yeah.
that was really important to you as well.
Yeah, as well. I think there was a lot of as well trying to do things differently because we were like sisters and we wanted to work together and then just do things different in terms of like be way more open about it, open the community, make finance a little bit more human, a little bit. Sometimes it like depends on which part of the wheel you are. It's all like Excels and numbers and transactions and returns and stress. It's not like a very uh, it's a bit hostile sometimes, and we just wanted to try change that a little bit. So I hope we're doing that.
I think as well the impact or the fact that we believe that we can make an impact even if it's at a smaller scale. I think that it's some of like our force since we were young. We always tried to like sort of impact our small communities when we were young. Like for example, selling bracelets and stuff and restore like we restore part of like the church in our town or raising funds for a school in Ethiopia. Like we've always tried to do something at a smaller scale, but what we could do at the time to bring value. So I think with that now at the larger scale now, we're trying or that we will see in the future, no? But our goal is to maybe try add a bit of impact from our side into the world.
Can I ask you girls how hard was it to make the transition from having the idea initially to then saying, okay, we need to start going and turning this into something real? Like making that transition is a difficult step.
Very, very difficult. I think we were very lucky as well. So maybe it wasn't as hard for other people, but it's not easy at all. I think the hardest thing to have is confidence that you can do it. Like we had the deck done and we didn't dare to say we had a deck and that we were raising money. We didn't know how to ask for money. We didn't know, we didn't know what you don't know, right? Like, so it's just, there's a part of naivety where sometimes we look back and we're like, thank God we didn't do like a market assessment of how many funds were there and what we were getting into. Cause that kind of, we're like, no, we're so convinced that there's nothing like this and we're doing it. And then it's funny because that we think we found our place in the market where we still believe but it's very overwhelming. And it was a bit hard. I think we were lucky as well with, as I said, for example, we had Bill as a mentor. We put some savings on the side. We started while we were both still working in our jobs. So nobody quit their job until we were like, okay, we have enough runway for like 6 months if everything goes wrong so that we can find another job again or go back to our previous jobs. So it was a bit challenging, but on the other hand, I think we were very lucky. We would like be very honest on the process with people as well. Like we would ask questions, we would ask for help. And I think a lot of the investors were like, oh, you need a lawyer, talk to my lawyer. You need this, do that. I can help you with this. Like one of our investors was like, oh, you don't have a person that can be a financial analyst? No worries, I'll help you out. I'll get on the startup call with you guys. We will do the reports. The first time we did the reports, it was actually written with the investors. So there's been a lot of people in the journey that has helped us a lot. So I think it hasn't been as hard as it could have, but it takes a bit of mm, a lot of confidence in yourself that sometimes you really don't have at the beginning. And I think you build that as you build the expertise and as you build the business and as you learn and you see, then you're more confident and then it comes. But at the beginning, you need to have this confidence because you're raising money and you don't necessarily have it. But I think, yeah, I think honesty and being always like passionate about what we've done has helped us a lot. But asking for help and just having amazing people around us. But it was a bit tough.
I think the Tech for Good angle has brought together a lot of good people.
I think our previous background as well helped. Like at least talking particularly on my side, I think, a good reputation in the industry. I did all my career in Geneva, which is a small place. So people know about people very quick in the industry. So if you're honest and you lead with your, like, even if you're just an employee, but you always do things with honesty and are transparent about what you're doing, where you are, then people trust you. And the fact that we're sisters, I think that brings another layer of trust. So when we actually told people, oh, we're raising money, people are like, oh, yeah. So, like, my previous boss or like one of our best friends. And so I think, yeah, in general, everybody knew us and they trusted us somehow. So it was great. I think that's where we had the background. But it's very hard to put yourself out there and be vulnerable where it's like, is it going to work or is it not? What's going to be the reaction to what we're doing? But it's been very positive. So we're very happy. So all good.
Yeah, I love that. It makes such a difference when you have people around you. And I think, as you're saying, that having a purpose-driven business makes all of the difference in the way you attract more people.
Yeah, totally.
For sure.
And there's intrinsic value and goodness in the thing already. So it makes it easier for sure. So I actually would recommend everybody to do purpose-driven stuff because, but it's true. It should be not even a category. It should be that everything is driven by purpose and everything is doing something good for society. I think we're in a pivotal moment where we need that. So hopefully in 10 years we're having a podcast and this is not a category. This is absolutely everybody out there is doing only tech for good and only building purpose-driven businesses. And hopefully that becomes just intrinsic as well, not like a topic.
And
Yeah,
Gemma,
like
that's
doing
your
good and doing
experience as
well.
well, isn't it? That, in what you've been doing, that purpose-driven makes all the difference in the way you're approaching things as well, Gemma.
Well, I think that being in business, there's so many things that go right and wrong every day, and that can be destabilizing. And having a bigger purpose that you're really focused on and lit up by helps to kind of maintain your energy and your focus. I think it's pretty like important to sustain yourself for the journey because of course there are examples of companies that became massive in a year or two, but generally it's a decade-long project, and that requires you wanting to get up every day and generate yourself in such a way that's going to accomplish things. And I think having that purpose makes that a lot more viable and builds resilience.
Yeah, I think it's important part of the whole stage. And I mean, how do you feel now in terms of where you are in the process of building the business? Do you feel like it's at the start still, or you feel like you've made some real goals?
I think, well, the other day someone told us that it takes 30 to 50 million to train or to mentor venture capitalists. So we're like, okay, great. Like we've reached that mark now. So now we're trained at least. So no, jokes aside, I think we're just very lucky. We have a very, very good mentor, Bertha, as I mentioned. So that that's so there's so many things, so many industries, so many sectors. Cycles are long. So it takes a while. I think we've learned a lot about patience, about ignoring a lot of noise and just being very focused and looking for the trends that we want, finding the people that are working on the trends with the right values, right culture, and slowly build as we go. Um, but we feel, at least as a team, for example, now we have a team. When we started, it was just the two of us with real support. Now there's a team behind us. It helps us a lot run things better. We're audited, so you can grow as you learn and add more resources to the thing that allows us to scale a little bit more. So we feel way more comfortable. I think now we can scale. We're doing our third fund, which is, yeah, I mean, year four, third fund for us is like, wow. Like when we started, we were like, oh, let's just do this so that we can learn a little bit. So it's nice to see
We're audited, which is a big, massive thing.
and so it's nice to see the progress. And I think there's so much more where we can grow and do. And we're young and we're like here for the very long term. So yeah, we're excited about what's gonna come. Yeah. But way more comfortable than at the beginning for sure. Although we always knew what we were doing, that time teaches you a lot of things, and then yeah, we feel way more comfortable.
What is the longer term objective for you?
Well, I mean, it's not about growing assets under management and how many money we can. I don't think we look at it like that. We look at it as trying to make tech for good like a thing way more than it is now. It's not heard about it enough. There's like competitions around it. I think there's a lot more to do on bringing awareness to the category. I think we found a niche on where we operate with the size of funds that we have and the early stage approach we're taking. So I think proving that and consolidating how we work in that niche spot we found, it's key because it takes time, right, to prove that we've taken the right decisions and that we've done things right. But we're very confident of what we're doing, and we think continue to do this consistently and how we're doing it, it's going to be key to the success in the future. And I think you can always grow in terms of, like, for example, we do early stage, so eventually maybe have a growth thing that can follow on our early stage stuff because we've already done the groundwork. So all the risk has been taken, all the work has been done. So eventually, just that's kind of something we could go towards. But I think just growing the community organically, continue to have the funds as we do, being there for our founders, there for the investors, continue.
I think Sangha itself, like the word, it means a community of people that help each other to lift each other up. And I think that we try and live every day by our name and values. As well, like we've been organizing yearly events where we gather funders, investors, and to allow them to like build synergies. And we hope at some point we're going to add value to both founders and investors. And yeah, I mean, we believe that it's powerful not for investors to learn about the company, but as well meet the founders. I think that's a very big thing that we're trying to provide and learn from them directly because we believe that it humanizes the portfolio in a way, and as well a little bit the finance industry because sometimes it can be a bit cold and distant. So we're trying to make this like more community.
Yeah, I think Gemma has
Yeah.
been super. We're very grateful because it takes a village, right? Like they say, and everybody shows up every year. Everybody comes. Everybody shares. We can see the companies like how they've progressed, and Gemma has been super key to that. We met Gemma back in 2018, and then we had the first fund which we couldn't invest in part later because there was no opportunity to invest whatsoever. And then we tried and tried, and then when we had the second fund, we were able to invest. So I think it just shows how back to the point of like maybe focus, find the right people in the right markets, not try to be very momentum driven and much more like long term. Um, yeah, relationships and long-term business and long-term returns and everything.
I mean, it's an amazing experience. And maybe just for the listeners to explain, like Powerledger hadn't actually taken we haven't raised any money or taken any investment from VCs since 2017. But I think now, like 2 or 3 years ago, Sangha became a shareholder by buying some existing shareholders out. And we hadn't wanted VCs to become shareholders because a lot of the terms that they were putting in front of us, we weren't comfortable with. We didn't think that they were actually great for founders and for the company. But I think that the sentiment and the approach that you guys had was really compelling for John and I, my business partner. And yeah, so it was very easy for us to want to be a part of that. And it was very compelling to say yes. And then once we're in the tent, having your annual event and meeting other investors and meeting other entrepreneurs and hearing from them and the activities that you create, it's an amazing experience. And it is like one of the highlights of our annual calendar. So I think it is very unique, and that it's also a great experience for an entrepreneur because I feel like that they're great things to be a part of, and that this, we feel really supported by you as a shareholder in how you operate.
Thank you.
Thank you.
Because I think, so when we look at our thesis and how we do tech for good and how we invest and allocate the portfolio, we're looking for big markets that need disruption. Then you need to have, so that gives you kind of asymmetric returns because if it's a big market that is changing. So that's what we're looking for in terms of returns for our investors. The timing and the execution, so the timing of what's happening when is as important as being in the right market. And so I think the founders is another key thing of what it's everything, but definitely very important. Then the company culture and values. And I think in the case of Powerledger, you guys hit all of the things we look for, because there was a timing in terms of like new technology coming along that allowed for energy markets to definitely be disrupting. And at the same time, it's not just the technology allowing for the disruption. I think the market needs the disruption as well. So another, the demand side of it that has come along, especially now with all the AI data centers and all the things. So there's been a big market that needs disruption. Definitely the way you had been executing, because as well as what back to the how we like to get to meet people and our founders, like we had seen you back in 2018, seeing the progress you had done in 2020, again in 2022 when we invested. It's just like, wow, it's just founders that don't give up. Like they know what they're doing, what they're building. And it's very important because there's, as you said, it is very tough. And this is energy markets, right? We're not talking about, there's like easier things to, I guess, disrupt. Like this is like, it's gonna probably be one of the hardest, but it's a massive thing that needs to be solved. Is good values, good execution, good people. So when we had the chance to invest, obviously it has to be good for everybody. Like there's not being too aggressive and then we win, then you don't win. And if there's a disalignment of interest, that's not gonna, in the long term, that's not gonna be good, right? So that's how we looked at it at the time, and we continue to look at it. So just to link a little bit our investment thesis to Power Letter, because I think you guys hit absolutely all of the things that we look for. So
I did. Thank you for sharing that. I didn't know that. And it's very obviously nice to hear how you approached it and what you think of us. So, yeah. I wanted to just change the subject somewhat slightly, which is, Berta, you mentioned before that when you were growing up, you did lots of things which were kind of, in the for good space. Tell us a bit about your upbringing and how those kind of values got instilled in you.
Well, I think since we were young, we had our grandmother, the mother of my mom and my mom. She was living at home back then. And I think they were the ones that raised us and sort of put these values into us since we were super young.
they're both teachers. by
They're
the
both
way.
teachers. I would say my grandmother was one of the, like, she lived in a small village, and still now I'm like 32 years old. I still walk around the village and they stop me crying, like, your grandmother changed my life, or your
Wow.
mom is the same as your grandmom. It's insane when you guys, your grandmother, I'm thankful. I'm never going to be able to thank you back for everything she did for us. I think, um, looking back, I look at my grandmother and I'm like, if I could do a tiny bit of that impact, for me, that's insane. We were Catholic, so we used to go to church, and our church was like, we needed a renovation, was not very like up to date. And I think as we were quite young, we are like, oh, we're into bracelets. We could maybe sell bracelets and help the restoration of the and we were like of the church. And we were doing like literally like pasta
Yeah,
bracelets and like necklaces and stuff.
Adorable.
There was not even price into it. It was like whatever you feel like donating, this is going to the church. And we made a lot of money. We were like
yeah.
in
We
euros.
collected in the equivalent would be like 80,000. That at the time my grandfather was our grandfather, so was the mayor. So we went with the 80,000 and gave it to our grandfather. I was like, this is for the church thing, and he's like, oh wow, I thought you guys were gonna come with like 2,000 euros after. But it took like 2-3 summers, and every summer it was like the thing. We would get our friends, make everybody work, and do the bracelets, and then we would go sell them. And then, yeah, so I don't know how much we should ask our well, he passed away, but we should have asked because we didn't think in terms of stuff. But I don't know how much it cost, but I think at least we contributed to a quarter of it.
Pretty meaningfully. Amazing story. And yeah, super, super adorable as well.
And always together, which I think for us, like when we're building the fund, it wasn't even a question because it was like, oh, how you guys decided to work together? I'm like, I mean, I don't know. It wasn't, we didn't decide. It was like a given.
But I think like back
Kind of
home,
like-
grandmother, I think all the values and all the sort of ground, it comes from my mom and my grandmother that still now I look up to them every day.
Amazing.
Yeah, they were both very patient. Like,
So have you got entrepreneurship in the family? What?
yeah. And funnily enough, we didn't know this much growing up because you don't ask, but then you ask questions when you grow up. And then our grandfather from our dad's side was actually had a business with his brother, which were like, oh, that's funny. So that was in the family somewhere. And then, yeah, our grandfather was definitely an entrepreneur. And even our grandmother, she was a teacher, but she was like, she adopted, I don't know how many kids in the village. She taught all of the classes herself alone.
Because it was a school with a unitary class, so she had all the ages. She was covering everything, so she had a massive blackboard. And she would be like, first grade here, second grade here, and she would make sure that all the kids in the town were able to read and write. so that they could like eventually get somewhere. But she would get into the detail of like providing clothes, food, house, if like they adopted a girl for a while because she had some issues in her place. Like it was to the level.
Yeah, so I think in different ways, they were a bit all entrepreneurs, like just
The father of
younger,
mine, he stopped, like he left his house when he was 14, started working, and then
built a business.
built a business. Yeah, I mean,
Yeah, built a business, which is impact too, because they would cut trees. They lived in the mountains, so it was a business cutting trees, and he always planted 2 trees for every trees he cut. So he actually never cut any trees. He double planted like the whole area.
and
And
every summer there was a day the whole village would get together and plant seeds. He would provide the seeds, and everybody had to go and plant seeds. And it was a nice activity as well to gather the village as a community and the families, because it was an activity that which you were looking forward every year.
And so if you ever guys go to where we grew up in Spain, which is like a tiny village almost next to France in the border, in the Catalan Pyrenees, he had this project with the European Union. There was a fire, and then he went up to, but we're talking about like 30 years ago, so it's kind of a bit revolutionary at the time, but he had a project with the European Union to plant trees from every continent of the world. So you actually have aspens, which I didn't even know you could have aspens in our little village in the. So this we saw doing a hike where like we linked the whole thing together, and our grandfather had literally trees from all over the world planted in our little village. And I saw an aspen there. I'm like, oh wow, like that. I was just like really good. So there's been always like this social entrepreneurship, I would say, in the family.
And then, like as I said, my grandmother and my grandfather from my mom's side, they were like super impactful in this region. And when my grandmother passed away, all the students and all the people in the town agreed on naming the bell on the church after her. So if you go to the church, there's the bell is named after my grandmother, and there's a short explanation saying that all the students and the village are thankful for everything she did.
Wow.
Yeah. Carolina. She got like, I got a good name.
So you can draw inspiration from her every day, it sounds like.
Yeah.
I love how the theme of community is so strong, though. It's obviously it's a big part of your background. It's a big part of your growing up, and it's clearly a big part of what the business model is too.
Yeah. We learned that as well from our. Now that you mentioned it, actually, from how we grew up, but as well from our co-founder. Like Bertha has always said, it's all about the community. Like it's the good people around good things and doing things together. Because if you make, I mean, this is a fund, but you can make it fun, and it even has the word in it. So if you do good things, you just add value, and everybody kind of collaborates. It's way easier to have something work than if you're on your own. Especially as Gemma said, it's like a decade journey, and you're gonna need help. You're gonna need customers. You're gonna need pilots. You're gonna need. So the more people around the mission, the better.
The way he's mentoring us as well. Like every time he, for example, now he thinks of a company or something that can be done, or he wants to fund a company, he's going to be thinking of like, oh, this friend of mine is going to bring value. This guy that was working on this project can help on this. Like he's always has this network that he leverages. Like he has like his own community that he taps into when he needs. And I think that's very powerful.
Yeah, so we're learning from that as well and trying to have the same at the fund level.
Ladies, maybe it's too early for this, but if there is, could you tell us about like what you've learned from deals that didn't go well?
See, yeah, rushing. When there's a lot of rushing into something like
pressure,
it's not good. I think founders that see the value can wait or can work it out, or they can understand the timings. I think when there's a lot of pressure and rush, it's not a good sign.
Right.
And it's about the people that we said. So I think sometimes there's things that protect a little bit. So for example, a board of directors, there's little things that sometimes like you read all the time in venture books that you're like, oh, it's okay. Maybe that's not so important. I think it is like just having, there's certain things that should be there that are there for a reason. And then the other thing I think we've been lucky that so far there haven't been that many things that went wrong at all yet. But because we're talking about long-term stuff, so a little bit of like this, if someone has a bit of a short-term thinking, that's like not a very good sign. And then too many pivots. Like we've had companies that just pivoted way too much, too fast. So at some point you're like, okay, like I don't know if either there's not market traction to what they're doing, or maybe they haven't found exactly what they wanted to do. So that brings a little bit of insecurity and then lack of trust within. And I think that has been as well another of the lessons. But I mean, probably if we redo this podcast in 4 years, we have many more.
What have you learned from fish that got away, like deals that got away from you?
I mean, it's early to say, I think, because we haven't had yet a deal that we saw that we didn't do and that now is like a big thing. It hasn't happened yet, but we do keep a list of things we've seen. So I think because it takes a while, probably some years down the line, we're going to be like, oh, and then we can take lessons from that. So that's something we're monitoring. We haven't had it yet that we know. Well, there was one we couldn't do because it was too oversubscribed, and it was in education, so we really wanted to do it. But then that's another thing. Then you see there's always a time if you like a company and you continue, I don't know if they really get away. There might be a time where they run into trouble and they need help and you can be there for them. So we learned to actually monitor things that we like, even though there wasn't space or we couldn't do it or we learned about it too late. I don't think it's too late because the cycles are so long. It's just the right moment. So we try to stay close, a little bit like we did with Power Ledger.
With you, yes.
Like there wasn't a moment where we could invest. We didn't even have a fund the first time we heard of your pitch and met you. And then eventually things turn around and you can't. So I think it's just staying patient, really avoid this rushing and momentum investing that I think there's a lot in the market.
Yeah, I mean, that's, cycles are formed by this kind of, FOMO, bullish activity, inflated valuations, market price adjustment, all of that. And so it sounds like having like high commitment investing, thoughtfully working with the companies and investing in a kind of more deliberate way rather than in a rushed way. And if you didn't get in that deal, but you like the company, staying in touch to see if there's an opportunity that arises in the future.
Yeah, exactly.
That's all for this episode of Unblocked. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcast Done For You. We look forward to your company next time on Unblocked.